So we'll be doing a technical analysis of these 7 stocks on the program today, and Robert Omotunde, Head of Research at AfriInvest, joins me. Robert, a good morning to you. Thank you so much for your time this morning. Taking a look at these particular stocks and talking about turnover expectations for 2016 vis-a-vis their current market valuation, what do you think? What are your thoughts?
Well, for the oil and gas stocks, you see the outing for 2016, and you analyze most of these stocks, the downstream oil and gas stocks, talk about Total, Mobil, Epo, Oando, or Conoil. What we've experienced so far, or what we experienced in 2016, was more of a market that reacted to major shift. Remember, in April, May, we saw a liberalization of that sector, the downstream oil and gas. And if you chart the trend on the index for the oil,
we seem to have lost connection there with Robert, but we're hoping to reconnect with him as we take a look at some of the major drivers in 2016, the expectations for 2016 and versus, of course, the current market expectation. Okay, we've been able to reconnect with Robert. Robert, thank you so much for joining me again. So let's continue your thoughts, yes, on the stocks.
Yes, so I was saying that for 2016, the major trigger for the oil and gas sector was the liberalization of that sector by the Ministry of Petroleum. And what we saw was that if you chart the trend in the index, you will see that most of the, around the period where we saw that liberalization, that sector received a major boost and major attraction by investors. But generally speaking, the sector was kind of upbeat in terms of performance in 2016, and the major drivers, the major driver I mentioned, apart from the fact that the market is generally experienced a very bearish performance in 2016. But to speak specifically to stocks, Total, Mobil, they've been a very clear winner, because if you look at the trend in that sector's index, you would see that Total and Mobil clearly outperformed the market, including Conoil as well, apart from the fact that we saw a lot of moderation in the price of FO and Oando, which generally drag the performance of the market. So on a line chart, if you see the performance of the market, FO and Oando were major drag to market performance, as we see that Total, Mobil, and Conoil in this case outperformed the market in 2016. And looking into 2017 and moving into this year, what we've seen so far in the beginning of trading this week, I think that most investors actually took profit on some of these stocks for the first week of the year. It's not surprising, given that towards the end of the year, in most of the market bellwethers, Mobil, Total will fall in that category. So it's not surprising that we saw some profit in the first week of the year. The sector generally will be shaped by, most likely by the policy in the sector, because if you look at the basic factors, the basic points that were considered in the modulation template by the Ministry of Petroleum, what we would expect now should be that there should be some price adjustment, except that the government is subsidizing the sector. So if we see a much more market reflective pricing of that sector, definitely the oil and gas sector will benefit in terms of positive market sentiment.
Well, Robert, we're hoping to get those slides that you sent in to us on screen, so we can take a look at the graph and how it's been like for those for this particular stock: Seplat, Total, Mobil, Forte Oil, Oando, and Conoil. But now let's talk a little bit more specifically. So that's the one we have for oil and gas stocks price trajectory in 1 year for those 5 stocks. Let's talk a little bit more about Mobil. Now, Mobil had a lot of stories around it in coming out of 2016, and we noticed that, of course, We seem to have lost connection again with Robert. Something to do with the network, I guess. But we're hoping to reconnect with Robert and continue the conversation. So, Robert, we've got you back, and thankfully we can continue this conversation and hope that the network does not interrupt again. Talking about Mobil and coming in from 2016, quite a lot of stories about it, especially the takeover of NIPCO of about 60% from Mobil. What is the expected outcome on this particular stock with this takeover now coming into 2017? Already taking a look at the list, we see that it's neither here nor there, but investors are booking profit very heavily of this particular equity.
Yeah, true. You remember last year, towards the end of last year, I think the first few weeks in December, we saw a major rally in this stock. Of course, the story is linked to the possible takeover of NIPCO, where Mobil Group is planning to sell a major stake to NIPCO. And what we saw last year was a major market move in line with that sentiment, and in line with the offering price that will be offered by NIPCO. And of course, what we saw this week also, last week was a moderation in that pricing in terms of what the market has priced towards the end of the year, where it's going to be positive sentiment for the stock, given that Mobil is going to be pulling out. You remember that Mobil has its upstream and downstream, so they are ceding their downstream to NIPCO, who is a player in that sector and is much more on ground here in the country. So, but generally speaking, the sentiment that will shape the industry, which Mobil as well, by the time the shares are transferred, NIPCO can benefit from, is the fact that when we see a market reflective pricing of the pump price of petrol, to be specific, that would have a very positive impact on the way the market perceives most of the oil and gas stocks.
So given the recent price trend for most of these stocks and also the general mood of the market, what would you advise for a stock like Mobil now? Would it be buy, hold, or sell?
Well, for us, we are very cautious about equities generally, not just oil and gas stock for 2017. The reason is because the major factor that dragged the performance of the market last year, they are still very here with us. We need a major policy shift in terms of policies that will favor the market. Market does not like when there's so much imposition on its normal working. So what would we expect is that this year a lot of oil and gas stocks as well as other equities will be shaped by the policy shift. In terms of policy, if you relate it to the FX.
But Robert, let me come in here. Let me come here and ask this, because for Forte Oil, for instance, and even though I know it will be driven most primarily by the dynamics and fundamentals that affect the other stocks, but Forte Oil did a 9 billion naira bond issuance in the fourth quarter of 2016. How would this affect their share price and trading in 2017?
Well, perhaps what would happen is that, of course, because they are approaching the market, so they may be incurring some more charges. Finance interest expense, because they will have to service that particular issue. But the major thing for Forte has been that if you analyze across the oil and gas stocks, where you have if you price them in terms of what the market is pricing, you see that Forte is relatively overvalued as against the industry average of 11.1 times. Forte is currently trading at 22.9 times price to earnings ratio. That's against what you will see for Mobil, that is doing 13.7 times, or a Total that is doing 7.5 times, or even Conoil that is doing 8.9 times. So obviously, when across this sector and you check the major other major oil and gas stocks, you will see that FO is clearly overvalued, and we may begin to see some form of moderation in that pricing going into 2017.
What about for Oando? Is there a likelihood that the losses of 2015, 2016 will taper off in 2017? Well, it seems to be one of those days for this conversation, but Robert Omotunde is the head of research at AfriInvest, giving us his perspectives and technical analysis, of course, of some of the big seven stocks we track on the oil and gas index, talking about Seplat, Total, Mobil, Forte Oil, Con Oil, Oando, MRS, and of course how they will be shaping up in 2017, most likely what investors will be looking at, and turnover expectations for the year vis-a-vis the current market volume. He says that most of the stocks are currently overpriced and overvalued, and so we see investors continue to book profit of those stocks. So, Robert, let's try to round off this conversation and finish off with Oando. Now, for Oando, is there a likelihood that the losses of 2015, 2016 will taper off this year?
Well, that has to do with a lot of factors that I need to put in place. You know, I think as at the third quarter, they recorded. They still recorded losses in terms of their operations. That in 2017, there's an upturn in the operations of the company. But as we speak, we are not so excited about the stock, and we are a little conservative in terms of investors taking position in Oando at this time.
But so for you, the fundamentals driving the entire oil and gas sector is more bullish than tepid?
Well, bullish if the policies are right, which I've mentioned. There's a general factor that is affecting or dragging the performance of equities. You know, if that factor is addressed, foreign exchange factor, if that is addressed, then the sentiment for the oil and gas sector will be bullish.
Thank you so much, Robert Omotunde, head of research at AfriInvest, for your perspectives this morning.